In today's episode, I'm going to answer a question that I see posted in the comments all the time. Traders will ask, Russ, if you're such a successful trader, why do you even upload videos to YouTube? So to answer this question, we got to go all the way back to the beginning when I uploaded my very first video in 2013. When I first uploaded to YouTube in 2013, my thought process at that time was that I was going to use YouTube essentially as a video hosting platform because I had a blog and I wanted to embed videos in the blog. And the sort of the easiest and the free way to do it was just to upload to YouTube and then from there embed those videos right into the blog post. It's kind of funny because today I would say that YouTube videos get more views than my blog gets just because of the changes in how people consume and search for information, especially in the how to something like how to day trade. People are more likely to watch a video than to read a blog post. So it turned out that YouTube became very popular, but that wasn't really the intention getting started. However, it does beg the question of, Ross, well, why were you even creating a blog? So I think to answer that question, we've got to take a little bit of a step back. When I was learning how to trade, it was a struggle, right? And I've shared this a million times. My first year, I had some success, but it was really kind of dumb luck. I didn't really know what I was doing because I was trading a little bit of this and a little bit of that. I was trading penny stocks. I was trading large cap. I was trading options. I was doing everything and anything that was moving essentially, but I wasn't consistent. I really just had some beginner's luck. And then that luck ran out in year two. And so in year two, things got real. And I was like, okay, what are we doing here? I definitely need to figure this out. I've been doing this for over a year. I'm starting to lose money. This is getting scary. And so one of the things that was helpful for me was to essentially journal and chronicle what was working and what was not working. So I started writing these almost kind of guides of this was the setup I took. This was the result. This is what happened. And I created a blog, which was a WordPress blog, which a lot of people were using at the time just for almost like an online diary, right? Just taking notes. So I did that and it was called Day Trade Warrior. And I just had these blog posts about these different setups that were working and what was not working, et cetera, et cetera. And I decided once I realized that some people were actually visiting the blog and were enjoying reading about this content, these were other traders who were in a similar position as me. Then they would ask comments that, they ask questions in the comments. I realized, I could probably be more articulate and this would just be easier if I just answered it in a video. So I had, for instance, a blog post on the volume weighted average price. And I was like, all right, well, let me make a video on VWAP and then I'll upload that to YouTube. I'll embed it on the blog. And so that was kind of the beginning for me. Now, I recently saw one of my old teachers. I actually went to his house. I knocked on the door and I brought him a copy of my book, How to Day Trade, and signed it for him. And I said, every now and then you'll have conversations with people and we'll be talking about, a great teacher you had or terrible teachers you had or school was the worst, And whenever I have the opportunity, I'll say that there was one teacher that I had who was an amazing teacher. And there is nobody that even comes in close second. And I said, Kevin, you were that teacher for me. And, he may not have been that teacher for everyone, but for me, he was such a great teacher. It just, the way he taught really connected with me. And in that program, it was a Montessori school, and I only went there for 2 years. I wish I'd gone longer, but I only went for 2 years. And in that school, there were two things that happened that were really pivotal for me. The first was we had a semester on the stock market. And so we had a semester on the stock market where we partnered up in groups and I asked Kevin, I said, what made you think of doing this? And he's like, I was just trying to think of a fun way for you guys to learn math. So they turned math class into basically stock market, which makes sense because you're doing a lot of basic arithmetic. It's very nonchalant, but for me, it was a huge, moment because it opened my eyes to the market. And this was during the late 1990s, which was during the dot-com bubble when things were going crazy. So I got really excited. And I actually tried to invest in a stock for the first time in the late 90s when I went to my local broker's office and I said, hey, I've got $100 and I want to buy this penny stock. And they said, well, we charge a commission of $50 to buy and $50 to sell. So come back when you've got more money. And I was like, oh, man. So 2 years later, maybe 3 years later in 2001, I funded my first account with real money with Ameritrade. That was before they merged with TD Waterhouse. It became TD Ameritrade. It was just Ameritrade. And that was sort of the beginning of me getting really interested in the market. So my interest in the market has been for more than 25 years at this point. And then the second thing that happened during that period of time was we were all required to do internships. And during the late 1990s, in this Montessori school, we had a computer lab. It was all Apple computers, um, and they were pretty progressive in that they were really teaching us not just how to use the computer, but we started as sort of a project learning how to do graphic design and how to build little websites. So I built my first website in probably 1998 or 1999, and it was a website, it's the simplest website with pictures of my guinea pig that I had at the time, and it was just like a little info about her. And anyways, that was my first website ever. So for my internship, I did an internship up in Marlborough, Vermont, with a woman who ran a web design business. And I would go up to her studio, and she taught me how to use how to write in HTML, and kind of how to use these different platforms, how to do FTP uploads to create your actual website. And that was like so amazing for me. And so I started building websites, and through the late 90s and early 2000s, I was building websites for anything you could think of. I was building a website for icons for the files that you would have on your desktop, which was like a cool thing in those days to create a custom icon. So I had a website just with tons of icons. My friend, who was even better with computers than me, he had a website with all these free games that you could download. I had a website with, cheat codes for video games that I was playing and stuff like that, like whatever, the different secret kind of codes that would unlock, unlimited money in SimCity or whatever. And so I was doing all that stuff. And so then when I kind of got back into trading, which was graduating from college during the Great Recession. I graduated from college during the Great Recession, and it's during this period of time when even people who have a master's degree are having a hard time finding a job. And so for me, and for a lot of people that graduated during this period of time, I sort of think of us as like we're sort of like a skipped generation in a sense, because in big employers, we're not hiring people that were coming right out of college because they weren't hiring anyone. And so for a couple years, there was really no hiring. 2007 or 2008, 2009, 2010, it started getting better after that. But it was slow to recover in some of the more rural areas, and I was living in Vermont. So the job market was terrible. And then once these employers finally started hiring people, they were hiring people that were fresh out of college, because someone like me who'd been out of college for 3 years but didn't have any relevant work experience wasn't appealing. So we kind of got skipped over. And it was during that time that I was like, kind of thinking, well, I had this friend, in high school that had made some money trading stocks, and, I've always been interested in it, and, maybe I could give this thing a try. And so I did, and I got into it. And then I kind of ended up just realizing at that time you could create a WordPress website, which is a million times easier than doing all the HTML coding yourself. That, CMS kind of management system is just really, at that time, was, I thought, terrific. So I was like, I'm going to create a blog, and I'm just going to start writing about what's working and what's not working. And then I'm going to add some YouTube videos. And over the years, I started getting more and more traffic to the blog, and people became interested. And in a sense, I set this goal of creating an archive, not exactly like a Wikipedia, but like sort of an archive of anything and everything related to day trading. Like, this was the thing I was so focused on. And I felt like the more that I was writing about it, what I was sort of doing was I was going and trying to find all of the tidbits from scattered across the entire internet and consolidate them into one place. And this was sort of part of my study. One of the things that the Montessori school was really good at was teaching you how to learn. So you chose something you were passionate about, and then they said, these are the things you do when you're passionate about something. This is how you study it. This is what you do. This is how you write reports. This is, you've got your thesis, you've got your 3 supporting paragraphs, you've got your citations, da, 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 da. And so I kind of approached it from that perspective, that this is my new independent study project. And so this was my 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 masterpiece. My tour de force has been creating this archive of all of this content over the last now 15 years nearly. Yeah, about that nearly. And so I it's almost like a master's PhD kind of thesis that this has become. Not that that was really the intention, but I just started creating more and more content. And my belief was that the more that I wrote about it and the more that I studied, the more ingrained I would be in understanding. And that would just be beneficial in me hopefully becoming successful. What ended up happening was I essentially kind of inadvertently created what had became a hub of people like-minded, thinking the way I am, about wanting to learn about the market, wanting to find, some opportunities to trade every single day. And so in 2013, I had the videos I was uploading to YouTube. And in 2014, I decided to open a free chat room at Warrior Trading, which was still called Day Trade Warrior at the time. I switched it a couple years later, I think in 2015 maybe, or 16, I can't remember. So I created this free chat room, and basically people that came to the website who were just looking for this random, tidbit about MACD or RSI or VWAP, they would see, oh, there's a free chat room, I'll just log in. And so during that year, the community grew pretty quickly from, like initially 12, 16 people, very small. Next, it was like 50 people, 70 people, 100 people, 200 people. And it was like, wow, this is a lot of people. But inevitably, what ended up happening was the free software that I was using to power the chat room wasn't adequate, right? It wasn't keeping up with basically the amount of people that were coming in. So I was like, all right. And we were getting some trolling, people that would come in and just like drop this random, like, I don't know, just like a lot of, I don't know, just weird stuff. Anyway, X-rated, just like links to these weird websites or these torrents or whatever. So it's like, this is getting kind of not good. So I was like, you know what? I'm gonna put this behind a paywall, and then I'm gonna be able to upgrade my my chat room software. And so that in that kind of moment, it changed from being just sort of like an endeavor, like it was just sort of essentially a free community, to becoming the beginning of a business. And another thing that I had sort of always been interested in is being a business owner. In the late 1990s, early 2000s, my first business was a web design business. It was me and my neighbor, Trevor, and we created a web design business. We incorporated it with the Secretary of State in Vermont and everything. And we started building websites for, some clients that we had. And we were high school students at the time, and we're building these websites. It was really an amazing thing. So that business didn't end up taking off, whatever. But we did have some projects that we did, and it was a great experience. And so, that was kind of my first business. And so when I ended up creating Warrior Trading as like, all right, this is a company, we're charging, whatever it was a month, I think it was $70 or $50 or something like that a month for, chat room access, monthly access. Then I was able to take that money and reinvest it in the tools. And then one of the first things I realized was that my own skill had really not kept up with being able to maintain websites. So I was like, how do I create like a membership login page? And how do I, embed all this stuff? And some of it, is easier today than it was then. But, I started realizing, okay, now I'm going to need to hire someone to kind of help me with this. And so things kind of started growing from there. And it was really like, it's such a contrast from when I think of like these Silicon Valley startups that have a ton of money. They're given, $100 million or whatever it is. And they're like, go create this app. For Warrior Trading, it was 100% bootstrap. It was, I wrote the website. I created the website. I installed a chat app. It grew organically. Eventually, I got to a point where I needed to upgrade the platform and the services. And so I had to cover the cost of doing that. I tried running some little affiliate ads and Google ads, but the problem is this is too niche of a sector that there's not enough traffic to make money on ads. someone was asking me if I make a lot of money on YouTube, and I said no. And the issue with YouTube is that, again, I'm in a niche. I'm not Casey Neistat, where I'm going to get, 15, 20 million views on all my videos and make $10,000, $20,000, on every video that I upload every day of the week. That's just not the reality for this space. Even the biggest creator in this space, and I don't know who that would be, but in any case, they're just not getting enough views. Maybe in the future that'll change, but the way it is right now, that doesn't seem to be the case. So trying to do affiliate, product things on the blog and doing like YouTube ad or Google AdSense, things like that. That just didn't generate the revenue to cover the costs. So I had to create kind of this membership platform. And then in 2014, after doing that summer, I taught my very first version of the day trading course, which is what has now become my full Warrior Pro curriculum. And I remember my wife, who we were dating at the time, I had taught my first class of the curriculum, and it was so funny because I knew I was going to teach 15 chapters. I kind of had this lined up, and I was like, this is what I'm going to talk about. It's like chapter 1, chapter 2, chapter 3. So I sit down and teach chapter 1, and I literally, I teach for like 12 minutes, and I had like 3 notes on a notepad, and then I was like, okay, I don't know what else to say. Like, I was like, had a blank. And she's like, why don't you make a slide deck? And I was like, a slide deck? What are you talking about? And she's like, why don't you use PowerPoint and make a slide deck? And then, you'll have a slide and then, build out your slide deck instead of just having like a little notepad with like 3 notes. And I was like, that's a good idea. So I did that. And now that slide deck, which I eventually converted to YouTube slides, is like 2,500 slides long. And that has become my that is like my thesis, my masterpiece. So I taught it for the first time in 2014. Then in 2015, I wrote the first version of my book, How to Day Trade. And during that time, I kept uploading videos to YouTube, and I kept writing blog posts, and we kept getting more and more visitors to the website. And then we got to a point where word of mouth started to spread, where people were like, if you want to learn about trading, the person that you should learn about for day trading specifically is Ross. You should go check out Warrior Trading. And so 2015, 2016, everything was sort of growing. And in 2016, I had a really great year. I made $225,000, right around there. And I'll remind everyone, as always, my results are not typical, but that was 2016. And I was kind of overwhelmed. I was like, gosh, now I've set the bar kind of high. And I was like, okay, well, that is what it is. But so I was like, I don't know, what should I do next year? And then on top of that, I had a lot of people who were saying, Ross, and this was in YouTube comments, which is something that I've kind of learned. You put your content out there and you're going to get a lot of engagement, a lot of comments. Some of them are positive, some of them are negative. And on YouTube, I started to have a lot of people who are like, Ross, you've got a big account, $100,000 account. So that's great. You're making $10,000 in one day, but my account's only $2,000. Your strategy wouldn't even work for me. I started seeing that theme a lot. And I was getting, to be honest, quite annoyed with it. I was like, you guys are like, I don't believe that to be true. I really think this strategy is scalable. And, people were like, no, it's not. And I was like, you know what? Screw you guys. I'm going to do this myself. And I'm going to show you that it is possible, that my strategy does work even on a small account, at least for me. And so basically in December, I funded an account with an offshore broker with like $600-700. And then there was a platform fee and there was a wiring fee and So I had $583 in the account with some cents. It was like $583.15 in the account on January 1st, 2017. And I said, I'm going to upload my recap every single day for 2017. And my goal was to make $100,000. I was like, let's just see what I can do. On day 1 of 2017, with a tiny account, I came to the table with one goal, which was to take only trades that were A quality and to take profit as soon as I was up 10 cents a share. Now, I know 10 cents a share doesn't sound like a lot, and with a $500 account, I couldn't buy a lot of shares, but I was using an offshore broker that was not enforcing the PDT rules. So what that meant was that I could day trade, and this broker was offering 6 times leverage, which not a lot of brokers offer that, period. But anyways, this one was. So I had a little under $600, which times 6 is $3,600 approximately. So I had like $3,500 of buying power. So I thought, if I could buy, in a perfect world, 1,000 shares of a $3 stock, I'll get in at 3, get out at 3.10. That's $100. Boom. That's going to be my day. And so I'll actually pull up my metrics here from that first month. So day one, I ended up getting 2 trades. I made $125, which was a net profit after fees and commissions. And with that, all of a sudden, now my account goes from $583 to $700. Day 2, 2 trades again, made $187. Now my account's close to $900. Day 3, I end up making $150. Now my account's over $1,000. Day 4, another $150. Now my account's at like $1,100. So in the first week, I make $618, and I've doubled my account, which is great progress. Slow but steady. And this is trading the same strategy that I am trading today, years later. And again, this goes back to my emphasis to focus on process. Profits are a byproduct. So my process each day, step 1 is to find a stock squeezing up. Step 2, analyze the technical analysis of the chart. And I'll just pull up my 3-step guide here. So again, step 1 is to find a stock that's squeezing up. I use stock scanners to find those stocks. Now, in 2017, I also took on this second sort of challenge, which was to build what I thought would be the ultimate day trading dashboard. It's called Day Trade Dash. And I actually, at this point, now we had enough members at Warrior Trading that I had the cash flow to hire a development team to start building out this software, which I felt like if I built it out, this would be the platform that every day trader would use, because it would include charts, scanners, it would have the news feed, it would have everything built in, the chat room, my video feed. This would be the ultimate dashboard for an active trader. So I was reinvesting in building this software. Now, some people would say, with the money you're making from subscriptions and things like that, could have just been putting all of that in your pocket. And, on the one hand, sure, I could, but you would pay tax on that. And if you reinvest that profit, then you get to write off that as an expense. And so essentially, when you reinvest in a business, whatever you would have made in profit, you only would have kept half of it because of taxes. But if you reinvest it, you get to reinvest all of it in your business. So if you really believe in what you're doing and you believe in what you're creating, you really should invest in the business. And so I started investing. And so step 1 is to find the stock squeezing, and I use my scanners to do that. Step 2 is to analyze the fundamental news catalyst to understand why the stock is moving. And step 3 is to perform my technical analysis. Step 2 is analysis, both fundamental and technical. And then step 3 is to execute the trades. So, and by the way, I will put a link for a 2-week trial at Warrior Trading for anyone that's interested who's watching this on YouTube, because we do have this 2-week trial that you might enjoy. So nonetheless, the first month there of January 2017, I set out with this goal of seeing how quickly, essentially, I could grow an account with $583.15. And by the end of the first week, I had doubled it. The second week, again, small green days, and then all of a sudden I had a $1,700 green day there on January 12th. And I was like, oh my gosh, now I'm starting to really get some momentum. So in the second week, I made $3,000 of profit. All of a sudden now my account is up, 400% in 2 weeks. Going into week 3, I'm pedal to the metal. I'm gaining momentum. I'm gaining traction. By the end of the month, I think it was $16,000 by the last day of the month, which was crazy. Remember, I set a goal of $100,000 for all of 2017 with this small account challenge. What ended up happening was, and I had this audited. So these are my last 7 years of performance audited. So I started on January 1st, 2017 with $583 right there, and made $16,000 in January. And then I made $60,000 in February. And in March, I made $28,000. In less than 45 days, I turned $583 into $100,000. My results are not typical. So I'll say that again for those that are like, wow, that's crazy. But it is real. It is audited. And I was blown away. So then I was like, well, what do I do now? And at that point I was like, you know what? You're 10% of the way to $1 million. 10%, yeah, you're still 90% to go. But if you keep your head down, this is what I said. It's not a matter of if, it's a matter of when. You will cross over $1 million because I have a process that I'm following every single day. And so through all of 2017, every single day, uploading my recap. Through 2018, every single day, uploading my recap. Through 2019, every single day, uploading my recap. In 2019, I crossed over $1 million in profit. So it took 3 years, a little over 3 years, to turn $583 into $1 million. If you look at the percentage return, it's sort of stupid because I started with such a small amount of money. By the end of 2023, I was at a 1.8 million % return. Now, I'll tell you right now, sometimes people say, Ross, if you're such a good day trader, you would be a billionaire by now. You would have taken, you started with $583 and turned it into now over 10 million. You should start with 5,000. You would be at 100 million. No, you should start with 50,000. You'd be at $1 billion. Okay, so I'm gonna call you out on this and tell you why that's wrong. My average share size through this challenge was about 8,000 shares. 8,000 share positions. That's not crazy. Some, of course, were bigger, some were smaller, especially in the beginning, some were smaller, but 8,000 shares. And so if I start with $5,830, my average position size would have to be 10 times bigger. So I would have had to have traded with an average position size of 80,000 shares if I wanted to turn it into 100 million. If I wanted to turn it into $1 billion, I would have had to have traded with an average position size of 800,000 shares. Now, if we look at my metrics, something that you'll learn is that my average hold time is not very long. One of the things for me, when I started trading, and we'll just go back here, my average hold time was 5 minutes for the beginning of this challenge in 2017. But if we just go back and look at all time, you'll see that my average hold time is not that much different than that. So my average hold time, go back all time right now, I'm at 5 minutes still. So again, that just sort of reiterates the strategy that I've been trading here is really the exact same for all these years. So one of the things that I would say is that day trading is something that there's diminishing returns at a certain point. You can grow your account, as I have, clearly it's certainly possible, but there's a point where you just can't take that many shares to grow beyond a certain level. So the share size where you reach diminishing returns for me has been around 50,000 shares. There are some stocks that I can take a 50,000 share position on, but it's not usually easy to move in and out of the market with that much size that quickly. It's just not really possible during most markets. Now, the pandemic was an exception. And so in 2019, I crossed the $1 million mark. We're still working on the development of Day Trade Dash. We're working behind the scenes. We started with the chat room and the broadcast because that at the time was our biggest pain point. We were using basically like off-the-shelf software like, WebEx and stuff like that. And it just was not performing well at all. There was too much latency. The stream would drop and people were complaining. And I was like, I've got to give these people the best experience. So my first order of business was developing out this streaming solution that I use today, which is ultra low latency. And I'll tell you that it cost a ton of money to develop it out. And I still have this development team that works for me that's helping, keep everything running. But we finally got it. And then all of a sudden, 2020, the pandemic begins. And when the pandemic began, the market crashed. And I was like, what is going to happen now? Like, the market dropped 30%. And in March, I didn't take very many trades at all. The market was very risky. But what happened that was really interesting is I noticed on cruise line stocks, Royal Caribbean, Norwegian Cruise Line Holdings, these stocks dropped like 70% within weeks. No one was going to book cruises now for the foreseeable future for who knows how long. And these companies carry a lot of debt. I mean, these boats are crazy expensive. You know how expensive it is to run a boat, So they drop, but they got exaggerated to the downside. And I started thinking that this was an opportunity to buy a dip for a curl back up. And that was where my dip strategy originated from. It came out of the pandemic. And so I started buying into weakness and catching these pops back up. And I got some incredible trades on it. And some of them were still very short. They were just like buying into weakness and then catching the spring back up. But that felt safer at that time. And so then next thing you know, in April and May, the market starts rallying. We've got this stimulus stuff going on. People are in lockdown. More people are trading. The volume is insane. And in June of 2020, I had the best month of trading in my entire career. I made over $1 million. It's incredible to think about because it took me 3 years to turn $600 into $1 million. And then in 1 month, out of nowhere, I make $1 million. And it wasn't with a big account because I never really kept much money in my account. I would make profit and I would take the money out. So I had, a couple $100,000 maybe at most in there, but it's probably more like 100,000 if I'm going to be honest. I'd have to go back and check. So I didn't have a lot of money in my account at that time. So one of the nice things with the way I've got this set up here, so you can always check my statements. So we can go back here to June. So this was 2020. So January of 2020, I had $70,000 in my account. And I lost $4,000. So that was a red month for me. It's kind of a bummer. And then I made a little bit of money here. Let's see. So, oh no, sorry. These are two accounts. So I've got my regular account and my margin account. So my margin account had 70. My regular account or my retirement account had 200,000 in it. So this was April. So then here, all of a sudden coming into May of 2020, I make I took that money out. So right here. So I make $158,000 and I grow my retirement account from 259 to 410,000. And then in June, I make $742,000 in this account right here. And it goes literally from $50,000 to $792,000 in 1 month. Unbelievable. And I also traded my retirement account and made another $500,000 over there. So 1.2 million, best month of my entire career. These accounts are it's unbelievable. And that just continued. July, crazy hot. I went on this long hot streak, consecutive green days. It was just unbelievable. And so all of a sudden in 2020, I made $5 million out of nowhere. Didn't see it coming at all. And, at that time, I stopped uploading daily recaps and I started doing what I called the live day trading morning show. And that was the beginning of the lockdown. I was like, you know what? We're in lockdown. We're all in this together. I'm going to, I'm going to broadcast every morning and we could just trade together and, create a little community in a world that was becoming very isolated. So I did that through 2020. And every morning I would go online for anywhere from 15 minutes to sometimes I would stream for longer. And I would give my watch list and I was streaming my software so you kind of see what my software looked like. And then later in the day, I would teach classes. So then January of 2021, retaught all of my classes, the Warrior Starter, Day Trading the Basics, and Day Trading Strategies and Scaling. And then boom, we get GameStop. This incredible move. And that week in GameStop, I had my single best day of my career, nearly $500,000 in one day. More than I had made in, previous 2-year blocks of trading every single day. I made it in one single day. So 2021 peaks, nearly $5 million of profit again in 2021. And then in 2022, you remember what happened? The Federal Reserve said, let's pump the brakes. We're going to slow everything down and we're going to increase interest rates at a unprecedented level, not at an unprecedented rate. So they spike up the interest rates to curb inflation, which originally they said was transitory, but then they realized that that was incorrect. So they spike up the interest rates, the economy slows down, and 2022 trading kind of tapered off. It was a lot slower. I made about $1 million in gross profit. Great year, but quite a lot slower. So if we look at the S&P 500, 2022 was this sort of stretch through here. And during this time, I was doing my morning show, but I wasn't necessarily doing daily recaps. So yeah, I was pretty beaten down during 2023. The market had gotten to this point where we're not seeing big moves. And I think that this was sort of the result of this, really quick increase in interest rates that had finally filtered down to the small cap stocks that I've enjoyed trading for all these years, where for these companies, it was more expensive to borrow money. So it was more expensive to run the business and they just weren't able to, produce the profitability that they had during a time when the economy was better. So I saw a lot of people during 2023 get extremely frustrated. I saw a lot of traders have red years. I was fortunate that I didn't have a red year, but I felt that same level of kind of disappointment. And I basically was beaten into submission to the point where I was just focusing on hitting base hits. I was like, I'm just going to take small base hits. But I didn't upload a lot of recaps. I was sort of feeling like there was nothing exciting to talk about. And I was sort of at a low point in a way. And then coming into January of 2024, I was like, I need to kind of like get my motivation back. So I said, you know what? I'm going to do a new small account challenge. January 2024, started a new small account challenge. So that got me kind of off to a really nice start in 2024. And then I just, kind of rolled into just trading my regular account, built some momentum, and, have kept doing well. And then I had a setback. I had a couple of big red days, and I sort of had this epiphany where I realized that I have this habit that when I'm red, I start to get desperate. I don't want to have a red day. And so I start to get desperate looking for anything that can recoup those losses to get me back to green. And that I tie a lot of my kind of self-worth to whether I'm red or green on the day. It seems really kind of silly because in the grand scheme of things, every trader's going to have red days. But what I noticed about my red days, and we could pull up my metrics here to kind of look at this in more detail, is that if we look at my red days, we can compare my winning days to my losing days. What you'll see about my winning days is that my accuracy on winning days is solid, 69%. That's great. My average gain, $655. We could probably look at my profit to loss ratio here as well. But nonetheless, average winner, $1,300, average loser, $900. And yeah, accuracy, 69%. That's good winning day. On the losing day, this is very interesting. My average winner is only a little bit smaller. It's about 1,000. But my average loser is 3 times as big at minus 2,600. And my accuracy is only 50% on losing days. So I sort of had this realization that, is there a way I could know that today is going to be a losing day earlier so I could stop trading sooner and stop digging the hole as deep as I dig it? And I came up with this new concept that I would start each day with basically a quarter of my full-size position, and I wouldn't increase my share size until I had first made at least 20 cents per share in profit, which would give me my cushion. So my quarter position is about 5,000 shares. 20 cents is $1,000. Now, I know it probably doesn't sound like a lot, but this has been such a game changer for me. Right now, I'm on a consecutive green streak that's more than 40 days long. You can see right here. Now, my longest ever consecutive green streak was 56 consecutive days. And I'm not counting how many green days I've had in a row right now because I don't want to put that number in my head and then get attached to it. But I know it's more than 40 days because it's been more than 2 months. And it is because of this change I've made. So this is kind of how I started thinking about it. Let me pull up my, I'll just pull up the slide here for a second. So let me just kind of throw this out here and let me see what you think of this. So what I noticed about winning days. So on winning days, basically, typically first trade is big green, right? I start with a solid green trade and I'm just like instantly instant cushion, and then I take risk using the cushion and get towards my daily goal and move towards daily goal. So next thing you know, I'm up, 5K on the day. And then on days when I'm feeling really good and I've done all of that in like 30 minutes, I just continue trading, like trade aggressively until momentum slows down. And then I kind of cool off. So like that's kind of my typical green day. But on the losing days, typically the first trade is big red. instant loss. Okay. So the problem here is that when I take that big loss, what's my instinct? My instinct is, all right, I just had a big loss. Look for next trade to take larger size to recoup first loss. And then often second loss, even bigger than the first. And here I'm at max loss, minus 5K, easily. Like it happens so fast. And so, and this would be a day where my accuracy is obviously, well, 0% if I just take 2 trades and hit max loss. But sometimes what'll happen is I'll have that first trade, for instance, and maybe on the first trade, I might even go slightly green. Like I'll have the first trade, I go slightly green. Then the second trade with big size, I'm at a big loss. And then I take a couple more trades trying to rebound, and then boom, I dig the hole deeper. So usually what happens on those days is it's like, this kind of, I'm just stair stepping down, right? I'm just going lower and lower. And these are the trades where every trade I'm taking too much size, I'm taking too much risk, I'm being really aggressive. And it's just like, it's the opposite of what happens on a good green day. On a good green day, it's a good winner, maybe a couple break-even trades, another big winner, a couple small trades, another big winner, a couple small trades. But on the red days, it's like big loser, couple small trades, another big loser, couple small trades, another big loser. So the big thing here is the word big, right? So yes, it's awesome on a green day to start with a big green trade and have an instant cushion and then be able, to take risk using that cushion and make my way towards the $5,000 daily goal and just essentially keep trading aggressively until I've had kind of, that first sort of like step back down, right? So that's kind of the spot to walk away. Because initially, like a little step down, keep going. Another step down, keep going. Another step down, keep going. One step down, and then a step lower. Okay, that's the spot to walk away right there. And usually for me, I calculate that hard stop if I give back 50% of profit for sure, but sort of a mental, kind of caution flag if I lose 20% off the top. But at the same time, if I don't give back profit off the top, that tells me I'm not pushing myself. And I say this to my kids all the time when we go skiing. I'm like, guys, fellas, if you don't fall down, you're not pushing yourself. Don't worry about falling. It's no big deal. We go on days when there's a lot of powder. It's nice. It's fun. You can fall. You're not going to get hurt. You've got to push yourself. You've got to trade at the edge of your comfort zone if you want to see those big green days. All right, so that's a given. But what I don't want and what I want to try to avoid are the big red days. And for me, this kind of came out of, I had sort of a tough month in March and then, sort of smoothed out in April and May. And then in June, I just happened to have a couple of, bigger losses that just got me really emotionally activated. And this was kind of where I started to like get myself in the zone. I think the issue here was that like I had a really good start to the month. And then basically I gave like almost all of it back. And that was like the beginning of like, and then, sort of a tricky week here, tricky day there, just like, and then all of a sudden it was like, it clicked. It was the craziest thing. And here's one thing that I'll say about my strategy. So, and then this was losing days. So on losing days, typically first trade is big red. So I was like, okay, maybe, is there a way that I could start my day with smaller size? So like that first trade, which kind of sets the tone, won't be a trade that brings me like halfway to max loss and gets me emotionally activated. And maybe I should stop taking larger size on the second loser. So new approach as a test. It was start with quarter size until I'm up 20 cents per share, which for me is 5K shares equals $1,000, a quarter size of about 20,000 share position. That's pretty full size for me. So I thought here, if I could do that, then on my first trade, here's sort of the scenario. First trade is a, let's say $200 winner. Stay with small size, right? Trade 2 is a $500 winner. Stay with small size. Then trade 3 is, $1,000 winner. Permission to scale up. right? And then from there, size up until, size up to full size, which is basically here. And then I'm going to stop once I've given back 20% off the top, approximately, right? So this is kind of like how I was easing my way into the day. And here's something really that I think is nice about the strategy that I trade. If we look at my days, how many trades am I taking? 22, 11, 20, 7, 16. We look at, the month of, I don't know what month that was, but, we look at August here. Some of these days, 30 trades, 69 trades. So some of these days, I'm really getting a lot of trades. And here's the cool thing. What this means is that if I start the day, let's say we play the other scenario where first trade is a $200 loser, stay with small size. Then trade 2 is a $500 winner, I stay with small size. Trade 3 is a $1,000 winner, or $1,200. Now I can start to, once I'm up over $1,000, size up. But if trade 3 is another $500 loser, then I stay with small size, right? Then let's say trade 3 is a $500 loser, 3 losses in a row, call it a day. Walk away right there. Now I could do that. Or I could say, well, my max loss is what? My max loss is minus 5,000. So right now I'm down how much? I'm down $1,200. So what I could say is stay with small size. And then let's say trade number, finally, trade 4. Trade 4 is a, $1,000 winner. I get 20 cents on 5,000 shares. Awesome. Then I stick with small size, and then trade 5 is another $1,000 winner. All of a sudden now I'm back to, in the green, right? So this is kind of the thing, because for the strategy that I trade, I see so many opportunities. There's a good chance that if I lose on trade 1 and 2, I'm still going to see 10 more trades today. Now, my accuracy is lower on losing days, but I think that's because historically I've gotten myself emotional and I've lowered my quality threshold to try to quickly recoup losses. And if instead I stay calm, cool, and collected, then I'm able to actually recover from being in the red to being in the green. So let's see. This was a day. We'll go back here. So this day I had a little bit of chop. I kind of was like green and red and green and red, but I never traded past max loss. And then there were enough opportunities I was able to make my way back into the green. So I finished the day in the green, which was great. I had another day. Let's see. I can't remember where it was now. It doesn't really matter, but another day that was similar. I went down into the red a little bit, but by the end of the day, there were enough opportunities that I was able to rally out of the red and finish in the green. I don't know what day it was. It doesn't really matter. It might have been back here. No, that was just that. See, this is just a nice green day, right? No loss. Nice solid green day. This one, fine. This one, fine. This one, fine. Yeah, sometimes it takes a second to find. I mean, generally, well, that one I went slightly red, but usually if I'm focusing on high quality setups, I could start the first day with a nice little cushion. Now here's the one where I went green, then I went red on trade 2. And then, it just bounced right back. And then once I was up over 1,000, I was able to step up. But as it turned out, there wasn't a whole lot to trade that day, so I didn't get super aggressive. So for me, I've heard of traders who, especially if they're a large cap trader or something like that, they might only get a couple good trades a week. But for me, because I'm an active day trader focusing on, small cap stocks, trading on the 1-minute chart, there's ample opportunities. So if I go red, if I can maintain focus and I stay, disciplined, I can maintain 60, 70% accuracy. And that means over the next 10 trades, statistically, I'll be able to finish the day green as long as I don't increase my size. So like that, it's just been like such a game changer. And this is kind of the incredible thing about trading. I've been doing this full time for more than a decade and I'm still learning. I'm still having these epiphanies. So this was a really big one for me, and it's resulted in my confidence going up, my accuracy going up, my total profits going up, and I'm looking forward to seeing where this takes me for the rest of the year. And of course, I'm now teaching this to all of our members because while I wish I had learned it sooner, no one taught it to me when I got started. And so ultimately, you guys benefit from my all my years of experience and how they culminate in these little epiphanies. The one that I had with the dip trading in 2020, the one that I've just had here, and some of the others that I've had over the years before. So it's like every now and then just things kind of click and I'm like, whoa, I hadn't tried that before. I can't believe it. It was so obvious. It makes sense that when you're having a red day, you shouldn't increase your share size. And yet so many traders, including myself, would. Now, coming back to kind of to bring it full circle with the YouTube channel, my growth as a trader, from my very early years, it kind of went in tandem with trading and creating this blog, which has turned into warriortrading.com, and then the uploads to YouTube, which has turned into the YouTube community. And they grew sort of organically. And in a lot of ways, they've become intertwined. Of course, I trade every day and I'm streaming for members here at Warrior Trading. So you guys have an expectation of me that I'm going to be here. I upload my videos to YouTube. I enjoy doing it. And at this point, like, why wouldn't I just do both? Because they're so intertwined. I've been doing them together for so long. And, in truth, I feel like uploading my recaps to YouTube in a lot of ways serves me as much as it might serve you, because it's holding me accountable to stay disciplined. Because if I'm not disciplined, I now have to come up here and say, I'm an idiot. This is what I did today. And so in a way, it makes me a more disciplined trader. And it also helps with my own process of kind of reflecting on what I've done right and what I've done wrong, coping with the losses and sort of talking it out, processing the winners. I mean, it's part of my workflow at this point. So, I think that there are some people, like if I had started trading and I was making $750,000 a year from day one, I probably wouldn't have created a YouTube channel because I wouldn't have struggled. I wouldn't have needed to create or to create an archive of like a database of all these setups, because I would have just naturally figured it out and been super successful right away. But because I struggled, these were things that I used and I needed to help me in my learning curve. And so I've just continued building on them as a resource for other traders. And, so yeah, I think that I wish in some ways I'd been the trader that hit the ground running and in my first year made, $1 million or whatever, but that wasn't me. I struggled. Because I went through that struggle, I really know what it's like for others that also struggle. And it's been meaningful for me to be able to teach. And I think growing up as someone who, to be honest, never really had a lot of self-esteem, I felt kind of not a lot of self-confidence. I don't know that I ever expected I'd become really good at something. And I've become pretty good at this. And that by itself is a huge sense of accomplishment. But the fact that I've become good enough at this that other people want to learn from me is, I feel extraordinarily blessed and fortunate. And when I share with others and you guys are asking me questions and you're like, Ross, tell me more, I want to learn more, it's like so rejuvenating for me. Like and it builds my confidence, because now I have so many people out there that care to hear what I have to say. Now, my uncle is celebrating his 50th year this spring as a college professor. He's in his 80s and he's been teaching for 50 years. My grandmother was a French teacher. My mom worked in the school system. And so in a way, as a third generation, my other grandmother worked in the elementary school. So in a way, maybe there's something in my genes that makes me want to teach or enjoy teaching. I don't know. I mean, there is some legacy of that. Not that I don't know, but it's just something that I find interesting. And maybe it's a communication style, just the way I was growing up around people who were sort of teachers. And I try to be a really great teacher and a really great guide to my children. And that's been like my greatest role so far is that. And one thing I'll tell you is that the patience required to be good at trading will carry over to your life in general. I really think it'll make you a better person if you can learn to be more patient. So the big picture is that I continue to upload every single day. I love making this content. I love teaching. I find it so enjoyable, and I'm planning, to continue doing it for as long as I can, because there's no reason not to. It's so nice. I mean, anything else, there's days that are easier than others, and last year was a tough year, and I did get beaten into submission a bit. But this year, I'm feeling really good. I've got some a nice tailwind, and I'm really trying to do everything I can to help support traders who are a little bit earlier in their career, to send the ladder back down. And I'm really proud of the software that I've been able to build. And you guys have, put your faith in me to build this with your membership fees and everything else. And I think I've done right by you. I know you're all enjoying the platform a lot, and we're continuing to build it and get it better. So at the end of the day, I follow every single day a very fixed and repeatable process. I know what I'm looking for. I know how to find stocks to trade. I know how to do my technical and fundamental analysis. I know where to get in. I know where to get out. I manage my risk. And as long as I follow that process every single day and maintain discipline, the profits are a byproduct. What we know is that most traders out there will lose money, and I believe they lose money for one of two reasons. The first is they fail to learn a strategy, period. And a lot of people that came into the market during the dot-com bubble or even during the pandemic, shooting from the hip, trading a little of this and a little of that, but it didn't really have a strategy, and they may have had beginner's luck because they joined the market at a good time, but ultimately that ran out. So you need to have a strategy, and I think it makes sense, rather than trying to go through the process of trial and error like I went through, to actually learn from someone who's proven profitable. Now, when I was learning how to trade, if you wanted to learn from a mentor, you kind of had to move to New York City and work at one of these prop firms or trading desks in order to get, in a community with other traders. And then, of course, you would have to trade the strategy that they were trading, but you really didn't have a lot of other choices. I was living in Vermont. I had applied to work at a firm in New York, but I got rejected. That was when I was I was younger, in my 20s, maybe 22. And, it is what it is. I didn't have the credentials that they were looking for, but to learn on your own in a rural area, 15 years ago, 20 years ago, it was very difficult. So I had no choice really but to do trial and error or move. But you guys don't have that same challenge. You can learn a ton from me, from a lot of the free content that I put out there. And then, of course, you become a member of our community. You can go through all my premium content, my full-length curriculum, and you can use my tools and listen to me trade every single day. And so if the first group of people fail because they don't have a strategy, the second group of people fail, in my opinion, not because they don't have a strategy. They have a strategy, but they lack the discipline to follow the strategy. I was just reading on Reddit about a trader who, said they've been doing this for several years and they're giving up and they've lost all this money and they've lost their job and their wife divorced them. And I'm thinking, trading right here is a symptom of a much bigger underlying problem. And again, I don't know this person, but I see that as like, there's a major issue here. And it just happened that trading is sort of the I don't know, is the vehicle, but it might likely have been something else, because you've got an underlying issue here with discipline, self-control, knowing when to quit. And you see that with people. And so if you follow a path that outlines, start in the simulator, do this for 6 weeks, do this for another 4 weeks, do this for 2 weeks, then go live with 100 shares only once you first meet these credentials, you're reducing your risk of all of that bad stuff happening. You're now trading in a safe environment. That's the right way to learn. And as a second side note, I read about this guy on Reddit who got something like $700,000, $900,000 from his grandmother when she passed away. He put it all into Intel stock, and then he had a good thesis of why he liked it. And then at 4 p.m., Intel announces that they're laying off like 30% of their workforce, and the stock drops 30% or whatever it was. And he's down, $250,000 like that. And that was a reminder to me that we need to know our lane. We cannot think that we're going to do as well or better than Warren Buffett and these big investors trading large cap stocks. We don't know anything about that. There is an area in the market where we have an edge, and that is on technical analysis, trading stocks that have breaking news. That is the spot to focus, and that's where I'm trading every single day. Now, for those of you guys who have tuned in and listened to this whole episode and are watching on YouTube, I hope you guys will check out a 2-week trial. You can watch over my shoulder for the next 2 weeks. You can see what it's like to be a member of the community. You can use my software, Day Trade Dash. During that 2-week trial, you'll have access to the scanners, you'll have access to the charts, the news feed, my broadcast. You'll have access to 7 chapters from my curriculum, so you can get kind of a preview of what it's like to be a full-fledged Warrior Pro member, and I think you'll really enjoy it. So make sure you guys check that out, and if you plan to continue learning about day trading and watching episodes about trading strategy, I hope you'll subscribe to the channel and hope you hit that thumbs up. Thanks as always for tuning in. I'll remind you as always that trading is risky. My results aren't typical, so manage your risk, take it slow, and always practice in the simulator before you put real money on the line.